Good evening, everyone. Here's your rundown of what's moving markets today and what to watch as you make investment decisions. Stock indexes continued to slide, with Wall Street on track for a rare 3-day losing streak. The S&P 500 Dow and Nasdaq all ended the session in the red as investor sentiment cooled and rate cut expectations were pared back. Tech and growth names led the weakness, especially after data and commentary suggested the Fed may hold off on additional easing. A key driver: stronger than expected labor market signals. Weekly jobless claims fell to 218,000, reinforcing the idea that the economy remains resilient and complicating the case for aggressive Fed cuts. Meanwhile, traders dialed back their probabilities of the rate cut in October. In corporate news, CarMax shares tumbled over 20%, dragged down by disappointing second quarter results and rising loan losses. Oracle declined over 5%, weighed by concerns about its high growth trajectory and a large new bond issuance. On the upside, IBM jumped more than 5% after HSBC disclosed it has used IBM's quantum computing technology to improve financial market modeling. Also catching investors' attention, Intel saw a sharp move higher amid reports that it is in talks with Apple for investment. On the macro front, housing strength came through in August's data. New home sales surprised to the upside, coming in at 800,000, signaling continued demand in the residential sector. However, consumer confidence plunged to 98.7 in September from 105.6 in August, its largest one-month drop in over 3 years, raising red flags about sentiment given inflation pressure and soft labor market narratives. In commodities and rates, 10-year U.S. Treasury yields hovered near 4.14%, reflective of a balance between investor demand for yield and caution over monetary policy direction. Gold rallied toward record highs amid the volatility and demand for safe havens. Meanwhile, oil prices drifted lower, with WTI crude near $64.65 per barrel. What this means for your portfolio: volatility is back in focus. The market is proving sensitive to macro surprises and hawkish pivots from central banks. Keep position sizes manageable, especially in leveraged or directional trades. Check your rate exposure. Financials, real estate, and